Great. All right. Then I guess we can start with our event now. Let me just adjust
Excellent.
my microphone a little bit. Perfect. Wonderful. Welcome everyone to our first virtual meetup. And Joe, please keep the camera on.
Yeah,
I can see that people love to see you.
yeah. Sorry, just I misclicked there.
No, no worries, no worries. So yeah, welcome everyone to our first edition of our virtual meetup from Crypto Traders International. We started out 2 years ago in as a small local meetup group in Berlin, and I'm very proud to see that we now have grown into an international community. And I've been keeping in touch with communities across the globe and welcome them to our larger community, and also been in touch with many European communities. Some of them have been mentioning some of the innovation, the tech they are using to trade cryptocurrencies more intelligently. And one of these recommendations was a platform called TRDR. So I got in touch with them and thought it would be a wonderful talk for wonderful idea for our first virtual meetup. What is so special about TRDR is that they have a platform that is able to show you information that you would usually not be able to see on the typical trading terminal or on a typical exchange. One of the masters of using this platform is Joe Sass. So when I was reaching out to TRDR, they said you should definitely get Joe on the show. And Joe is going to show us today how he is using TRDR, how he is using order book data in order to build his crypto trading strategies, but also in order to optimize them. So we have three topics today. Joe is going to cover very quickly in a 10 minutes rhythm topics for novice traders, then for intermediate, and then for advanced. And at the end, we're going to have a quick Q&A session. By the way, I just also want to mention that, of course, today's episode is also sponsored by TRDR. If you want to support us, then please follow the link in the description, which gives you an extended trial period. And I'm sure on another opportunity, Joe will be able to show you even more how you can use TRDR. Without further ado, I would like to give over the word to Joe. Joe, that you might have seen also on Block TV, and Joe, who's switching in today from the States. Joe,
Yep.
please say
So
a few
yeah,
words.
very happy to be here. Been a crypto trader full time for 4 years now. This month, and yeah, so I developed the order book analysis. Me and Trader were kind of attached at the hip in that sense because they created the visual data, and I had spent many years before that analyzing the order book without visual data. So of course now we have the ability to use this visual data to back test and observe the various anomalies that make order book analysis work. And that's what we're going to dive into today. Like Pierre said, starting with some more basic things, moving into intermediate, topping off with a couple more advanced messages here, and then moving on along, potentially to future meetings.
Excellent. Then I'll give you now the possibility to share your screen, and I guess we can jump right in there.
All right, well, let's get the party
Oh,
started.
1 second. One
Uh-huh.
thing I have to mention, even though the event is already being streamed on YouTube right now, and it's probably also recorded on YouTube, I will still record the event now over Zoom. So everyone, please know that questions you will be asking also will be appear later on the recording. So feel free to go ahead, Joe.
All right, so yeah, we'll get the ball rolling here, and I'm going to start with some screen share. Thank you so much for having me, Pierre. A pleasure to be here, a part of this group, CTI, and So let's start with the basics. We're going to build from the ground up. For anyone that's new to markets in general, just we're going to cover a very basic understanding, and we'll get started now. Moving into screen share, and here we go. All right, so I'm looking at the trader platform itself right now, and this is going to be crucial to do while I explain what we're talking about. So the first thing that I want to talk about on the most basic level is market participants. We have two kinds. We have market participants who put orders in the order book, AKA they're also known as limit orders. And then you have market orders. So the way to distinguish between the two is a limit order is someone that adds liquidity to the order book, and liquidity is simply just adding money to the order book or adding Bitcoin to the order book, to say that there are going to be price areas where there is control. There is in this example, there is a lot of control here at 11,300. There's 233 Bitcoin worth of cash dollars worth of buying 237 Bitcoin now. So what we're talking about are these are limit orders. These are people that are creating the conditions upon which they are willing to make the trade, and that is adding liquidity to the order book. They are typically get less fees. A lot of exchanges will provide a limit order with a smaller fee. They'll also provide a larger fee for someone who makes the market order, and this is the market order. So these are the ones that are making the condition upon which the order is going to be executed, if it is executed. And these are all the people that are pressing that market sell and market buy button. So the difference between the two is simply fees. And what order book analysis focuses on is both, but primarily on the order book. We want to know exactly how many limit orders there are stacked in whatever section, right? Right now, at a quick snapshot here, we're looking at an order book that is stacked pretty heavily in favor of the bulls as we near the $11,300 range. And I can scroll down a bit here. 11.2 is stacked with a so when I say stacked, I mean there's just a lot of demand for Bitcoin at that price range.
And sorry to interrupt you, Joe. Just a quick question for our novice traders here. So you're saying limit order. So does that mean the price we're seeing right now at $11,400? So if I would want to buy a Bitcoin at, let's say, $11,380, I would be able to set a limit order, and that would be appearing here on the order book we're seeing on the right.
Absolutely correct. In fact, on most exchanges, they'll even put like a little symbol right here to let you know that your order is a part of this aggregation. And if price happens to move down, it'll let you know that your order's in this aggregation and this is where it'll fill. So thank you for pointing that out. So you can see that there's a lot of liquidity. Like I mentioned earlier, liquidity is simply, in this case, money. When we're talking about liquidity on the buy side, all we're talking about is money. We need dollars to buy Bitcoin, or you need fiat to buy Bitcoin, right? So this is all demand for Bitcoin, and people are paying. In this case, we're using the Binance US dollar tether pair against Bitcoin. So this is Binance data with against US dollar tether. Okay.
But by the way, is that also what we are seeing now? The order book data from Binance, or are we also able to see order book data from another exchange or from all exchanges combined?
So there are ways to do this using the order book overlay, which we'll get into later. But in this case, the order book data that is represented is based on the ticker symbol that I'm using and the exchange that I'm using. So while I'm here on Binance, I'm only looking at the order book on Binance. If I looked at Coinbase Pro, then I would only be seeing a Coinbase Pro order book, which would actually be far more illiquid than this, but it also has far less traded volume. So anyways, we'll get to that later. But yeah, so just the concept of support in the order book means that there is tremendous demand or lack thereof on either side of the book. Right now, it looks like there's a lot of demand to sell. Someone is actually trying to, it looks like, instigate a sell-off by running a big sell order at the top of the book, and they just accomplished their goal. They just cleared out an aggregation, but there weren't any sellers to chase it. So this would actually be someone that may fall under the term of a spoofer, and you can see that that 40 pack, that 40 order of Bitcoin, which is likely multiple market participants, and maybe even very few, has dropped all the way down to 7, 5, and 2. So someone was putting a lot of orders at the top of the book, stacking it to make it look very imposing, so that buyers would be intimidated out of their positions and likely market sell something like this 15 market sell right here that knocked out 51 buy orders on that subtick. That's what a spoofer is trying to do. Right now, what I see are people trying to shake out weak hands. The sellers are trying to push the bulls into their accumulation zone. And accumulation zones have a tendency to be horizontal lines. You can see that time and time again, horizontals will play out. And we can talk about horizontal. I mean, we could talk all day about horizontals, but we'll move along. The point here is that as you build support in a range, the next time you come to test it, there's probably, especially the more time you give the market to come back to that level, there's going to be more support. So last time we were in the 11,400 range, which we've actually poked our head just beneath. We cleared a lot of this out, but price didn't go much further. This horizontal is being defended pretty successfully by the bulls, and anything that we do to the downside is going to be met with a lot of support. So right now, looking at the order book, again, focusing specifically on the order book and the limit orders as the market participants, excluding the market takers, the ones that are making the market order button, we're seeing that there's a lot of support in the order book as we move down. A 238 pack at 11,300, a 131 pack. And, of course, this isn't necessarily one buyer. It's most likely multiple buyers. Could be hundreds, could be thousands, could be 5. But either way, the fact of the matter is there's a lot of support in this range to the downside. So it looks
So
like
that means it could be pretty difficult to get lower than 11,300 at the moment.
It's going to be very difficult to do that. They're going to have to clean out. Someone's going to have to sell 400 Bitcoin approximately just to clean those two aggregations out. So 400 Bitcoin getting sold at this price, is that uncommon? Not quite, but we're not in a market panic scenario. And we'll explore market psychology, of course, a bit toward the end here, but nothing is really expressing a serious psychological shift from bulls in control of the market, which we have been for quite some time, really taking this market for a run, breaking through 12K numerous times. And I know there's a lot more noise than my followers are used to here, but I'm actually trying to build out the trend bias band a bit here. This was the 5 to 10% band, and we'll move on to that in a bit. But just to finish off with the basics, we have the limit orders, which are clearly stacked in favor of the bulls. Right now, there's just far less liquidity on the sell side. We're looking at 20, 30 packs and 40 packs running all the way up to about 11,700, where we have our first triple digit sell wall. This would be a buy wall. This would be a sell wall. So our first triple digit 129 pack at 11,700 is our first major resistance zone, and there's really nothing to say since we were just at 11,700 just a number of hours ago, 12 hours ago. So it's very possible that this order isn't a very serious seller. This could be someone that is very willing to pull their order in the event that Bitcoin starts swinging to the upside. So that does make a distinction between static orders and dynamic orders. You see the most dynamic activity here at the top of the book. You see all these, you see this bar kind of moving up and down, or you can look at the number and you can see that we just went from 40 Bitcoin down to 15. Very dynamic space as you get close to the spot price, the fair market value of Bitcoin. Whereas the further away from the book you get, the more likely you are to have what I call sleepers or static orders, where you have this 238.105 pack really isn't flinching at all. There's no one adding orders to it. There's no one really subtracting orders from it. It's just very, very minuscule movements there. So, the point here is that the order book is going to have a dynamic range and a static range. And spoofers, which are kind of your enemy as an order book analyst, they are the number one. Their number one objective is to get you to spook you out of your position by forcing you to sell or buy at the exact wrong moment.
So spoofers By the way, what I understand, that's a illegal practice in the traditional financial markets. But since the crypto space is still not very regulated, we still see that quite often today. So
Yes.
what I understand from and Joe, please correct me if I'm wrong. What I understand from spoofing is you put in orders into that order book so that other people see that, and you can move them up or down quite quickly in a high frequency trading
Yeah,
fashion. And that's
absolutely.
basically spoofing, right?
Yeah, there's really that's spoofing in a nutshell. You put your order in the book and you have your finger hovering over the cancel order button. And the second it looks like part of your order is going to get filled or it looks like price is moving against you, then you pull that spoof and like the goal of the spoofer, let's say on the sell side, let's say that there's just 123 Bitcoin and it was someone spoofing the price down. What their goal is to try to push other market participants to market sell their Bitcoin into their accumulation zone. So chances are the spoofer is also the one that has Bitcoin stacked up in this range. So a spoofer's job is to convince you that that you're going to be losing money if you hold on to your Bitcoin. If it's a spoofer on the sell side, they're trying to convince you to dump your Bitcoin holdings and move you into their accumulation zone, at which point the market reverses. And that's where you have a lot of people a lot of new traders that inadvertently buy tops and sell bottoms, the exact opposite of what you're trying to accomplish as an analyst.
Very interesting topic. I recommend the audience to dive deeper into spoofing and either ask Joe after our event or do some online research. Very interesting topic.
Yeah.
Okay, I'd like to move over now to our intermediate section or intermediate topic.
So yeah, so what we're going to talk about a little bit here is still technical. We're going to talk about the order book depth overlay and why this matters. Okay. Um, what the order book throughout the course of my research, what it's boiled down to are ratios. There are certain points of overextension by one side or the other, the bulls or the bears. When the bears experience, let's say, a very violent sell-off, what you have is a very illiquid side of the book. There aren't too many sellers chasing this. In fact, we have one full aggregation, a $10 aggregation with 2 Bitcoin in it. This thing can be cleared up by, a very, very small market participant or a relatively small market participant. We have 11 packs, 9 packs, 15 packs, 4 packs. So what this creates is an overextension, therefore a ratio of bids to asks that is overwhelming. And we can see the different ratios here in this top right corner. In the 0 to 1%.
Just for our more inexperienced traders, bids and ask packs.
Okay.
Could you give us some color on that?
Certainly. A bid is simply a limit buy, and an ask is a limit sell. So a bid is anything that's green in the order book, and ask is anything that's red in the order book. And you can actually see that here on the trader platform in the top right corner of the order book on either side. So the bids are all down below. Those are people that are, throwing out their dollar bills saying, hey, I'm willing to take my Bitcoin for this price. And the asks are saying, hey, I'm willing to sell my Bitcoin for this price. Still limit orders. This is all limit orders. So
thanks, Joe. And about packs?
And a pack is simply just a cluster of Bitcoin in an aggregation. A pack has value to it. A pack, keep in mind, a pack is just a number. So looking at this right now, I would call this a 12 pack or a 13 pack now that it just moved up. So a pack is just my simple way of saying there's a pack or a stack of demand or demand to sell or demand to buy at a certain aggregation. An aggregation is simply a price range. And so that's all a pack is. It's just I speed through some of my terminology there because I've just been, running through the order book for so many years now. But yeah,
you've been doing this every day on YouTube. I know.
Yeah, been my life.
Hard to go back sometimes to the earlier stages where you have to explain these things. I understand.
Yeah.
Okay, then I don't want to interrupt you further, and please continue with the intermediate section.
Yeah, and don't hesitate if I'm moving too fast and do it. I appreciate your commentary there, Pierre, and I hope that we're providing the best service here for every viewer. So
Absolutely.
moving into the ratios and the bands, each band represents a different distance from price. So this first band here is 0 to 1% distance from price. Now, 0 to 1% is also, you can also see right here, there's 0 to 1%, and looking at Binance Spot, aka in other words, US dollar tether, because this isn't a true spot market, it is US dollar tether back. We're seeing a strong ratio value of, a relatively strong ratio value of bids to asks. This is green, so we know that bids are in control. I can also simply look down here and see that the ratio is 41.73. And it actually just decreased significantly. Something must have happened there. Someone pulled a bid. But yeah, that's what happens in that 0 to 1% space, because it is so dynamic, as we were discussing earlier. This creates more of your scalpy territory. You get into very small positions, or quick positions is more of what I'm trying to say. The risk and the capital associated with a scalp should generally be addressed based on your trading style, your comfort level, but I would recommend that the higher the leverage you use, the higher the risk you use, the smaller the time horizon of that trade, and generally the lower the capital value of the trade. Being that you will, if you were to get liquidated or to lose, the trade was to move against you, you would lose far less money because you were more leveraged and your additional capital is off to the side. So the 0 to 1% distance from price is more of a scalping range. Your time horizon is going to be a bit smaller. Now, into the 1 to 2.5% band, this is where control of the general market starts getting involved. Now that we're 1 to 2.5 distant from price, and the ratio, as you can see, it was white. White is kind of what I call a probe signal, just kind of saying, hey, this is, depending on market liquidity measured by this number over here, this blue number, I would say, all right, this looks like a decent signal to take, a decent scalp. And yeah, you might have made a, 0.5% on a 10x trade. That's a 5% profit. So a scalp is the purpose of the 0 to 1% band is really to take less capital, a bit more risk, and to take the money and run. Now, the 1 to 2.5% band, and one last thing on the 0 to 1% band, the darker the color, once you start hitting the purples, the more serious the signal becomes. White is more of a probe. By probe, I just mean it's kind of saying, you can start sharpening your blades and get ready for this trade, get ready to enter the market. But once we start
So
seeing
Joe,
one,
so how are these, with which numbers are these colors correlated?
so
So
uh,
what happens on the statistics or on the numbers level when these things are red? What
so the
happens if it's blue, and what happens if it's white?
So on a white one, 0 to 1%, this is a ratio value of 60 to 5. So 30 to 1.
So what's a ratio value?
A ratio is saying that there is that many more bids than there are asks, which means that sellers have overextended to a point where there isn't liquidity to follow the book and there isn't demand to run the book down any further. That is a very important thing to understand, is that sometimes there will be violent sell-offs, but if that's a psychological sell-off as a result of a big red candle or some bad news or a liquidation or something like that, it's usually going to be a pretty quick display there. Now, the ratio value, as sellers overextend and they do not stack the book, which we clearly see. I think this 2.9 pack hasn't moved. We got a 6-pack here, 10 very, very small pockets, the same pockets, $10 aggregations with very low liquidity levels. The only people that are doing any action are at the top of the book, which really makes me feel like someone's trying to push the price down right into their accumulation zone, but it doesn't seem like there's any market sellers doing anything. So we're looking at the actual market market takers. These are the ones that are pressing the market buy or market sell button. And you can see this is just dust. Dust, in other words, is very small amounts of Bitcoin. Here's an $88,000 buy. That's a pretty significant buy. 88K is a bit more significant than 0.0003, right? So
So when we see these white, how do you call them again?
These market buyers and sellers,
Yeah,
takers.
these white
Oh, white,
spots
these.
on the yeah.
Uh-huh.
What usually happens compared to, let's say, the red ones or the blue ones?
So the red ones and the blue. So we'll get to, the red ones are just say that the ratio is far more significant. It begins white begins at a 60 to 531 ratio, right? And then
Mhm.
purple picks up at around 65 and greater. From there, the signals become pink, and pink is probably your most valuable signal that you can take because the order book, the sellers or buyers have gone so overextended into the opposite territory that there's no liquidity running the book and chasing the book, which means that there's going to be a low liquidity sweep that runs the price right back up. And all I mean is that it took a lot of money, let's say in this instance, to sell and to dump a lot of Bitcoin into the market and clean out a lot of these orders. But then when they leave themselves with no Bitcoin left in any of these aggregations, then all it takes is a little bit of FOMO and small money to move the price back up just as quickly. So
So
sellers have left.
FOMO is fear of missing out, if
Yes,
I remember that correctly. Okay.
absolutely,
And
and it works on both
a
sides.
signal, and if I remember correctly, a signal is a signal that you can go enter a trade now, so you can buy something, or you should exit the trade now because something is happening in the market, right?
Absolutely, and all these signals, this is SAS signals. This is my 2.5 work, and I'm still working on a lot of this stuff. But for now, SAS 2.0, 1.0 have been working out fantastic. And so far, what we've seen is a very strong ratio dominance here on this final bottom, and the addition of the 1 to 2.5% band, starting at around the similar ratio of around 30 to 1. So not only did we push into 30 to greater than 30 to 1 ratio in the 0 to 1% band, now the greater market control has entered the space, which means that we're now pushing into this territory, and this control is going to be much, much more difficult to break. So
So when we see these white bars or red and blue bars, that means the price is likely to go lower.
So in this case, price is is getting ready to go up. We had a
All right.
couple of light signals. Price did go lower, and this is why my particular trading style involves multiple entries. I don't like to go all in on one trade. I like to stack my leverage in. If I haven't exited, I would be stacking in little bits, 1x, 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 put myself end up in 5 to 10x position. And by here, my average entry has now dropped. So let's say I started entering at this point.
Yeah.
My average entry, as I've added leverage here, and at this low, of course, my average entry, if I added the same amount of leverage each time, just steadily decreases. And now, as I'm looking at the chart and my actual trades, I'm just under break even. This is my break even, let's say. So as a result of adding leverage and trusting my signals, and of course falling into this point where we now have two band support, being the 0 to 1% band and the 1 to 2.5 band control, this gives me a lot more confidence in my signal, saying that, yeah, I'm very comfortable adding even more than 1x at this point to drop my average entry a bit further, a bit lower, so that I can, if needed, scalp out at break even or at far less of a loss. So that's the advantage of trickling into your positions. Now,
Okay, just questions from the audience already, which I think is relevant to ask here, and then we should move on to the advanced agenda point for today. So Tony is asking, do you find that when there is a strong green band underneath price, yet the market continues to drive downwards, is because of large market sells overwhelming the stack bid?
absolutely, that is true. Now, keep in mind, if you're referring to this green that I have up here, this is new. This is something that I'm working on, and I just started working on, and there's room for improvement. But yes, market. So the one thing that the known is for the most part going to be the order book. We can visibly see and know where people are stacked. The known unknown, or the unknown unknown, is when market participants are going to market buy or sell. And you're 100% correct that even if there is support in the order book, market sellers can easily push the price down. And that is like, that's a huge part of order book analysis, is predicting the psychology of the market, which is going to be our most advanced layer of order book analysis, and understanding the various things that can cause and trigger market participants to have that fear that causes them to sell, or that fear that causes them to buy. FOMO, fear of missing out, works on both ends. So we'll analyze, we'll get to that here in just a bit. But yes, there is ratio dominance, and it's perfectly fine to have ratio dominance, particularly with these ratios. They're very powerful. I'm working on a trend bias, and that's what these green are. But I'll continue that research, and I'll be displaying all that content as I continue to stream on YouTube, but and of course in the future here on CTI. But for now, that's what you're saying is absolutely true. If there can the market sellers can push right up into the support, and for all you know, we could fly down from 11K like we did back in March 12th. We went from 76 to 4K in the blink of an eye, and that was all because of market selling and liquidation bots, and we'll get to that too.
On that note, I'd like to transition over now to the advanced agenda point for today: psychoanalysis of market participants and why they're likely to overextend at times to produce the ratio required to produce signals. So, and again, signals we've been already clarifying earlier, but maybe you can explain a little bit around what overextending means and what a ratio in this context is.
Okay, so psychoanalysis is the fundamental root of order book analysis. What we're doing is we're observing the fact that there are orders in the book, and we want to identify what the psychology of the market is. Is there incentive to blow through that support by a big bag holder trying to get rid of their Bitcoin, or is there incentive for buyers to blow the roof off the house and send us straight to the moon? That psychology is going to be the cornerstone of your analysis. So, Pierre, you mentioned a couple things that I want to get to here. Would you mind just bringing them right back up real quick, and then we'll hit those first and move into further psychoanalysis of market participants?
Sorry, you would like me to repeat some of the questions?
I think you mentioned two things.
Yes. So no, I just wanted you to explain a little bit more on what overextend means, and what you mean with ratio and required to produce signals.
Okay. So
which ratio you're talking about here?
Yeah, they're actually both almost one and the same concept. Now, in overextension, what I mean by that is when sellers have a massive sell-off, and unfortunately, this isn't really something I can just historically look back and find. But an overextension is simply a very violent move to the upside or the downside, where when they do that, they move the price up so quickly and for lack of a better word, violently. Bitcoin is just so used to volatile swings that violent is almost like the best word to use for it. But these volatile swings to the upside, what happens is we move up so fast that it doesn't give buyers any time to really accept the price discovery that is being created from that move. Therefore, they will not put orders in the order book because price is moving too far too fast. They don't trust this move. They don't feel comfortable. They said, why would I buy Bitcoin at 12,500 when 15 minutes ago, an hour ago, it was at 11.8? I'm going to stack my bids down at 11.8. And look what they did. They stacked their bids down at 11.8. There was liquidity chasing the book. There was no follow through. The price stalled out. And then almost as quickly as it went up, it went right back down. And there was no liquidity there. So that's what an overextension is when buyers or sellers push the price in a very quick and large candle fashion. There aren't the buyers or sellers to chase the book and fill it with orders. Therefore, that overextension creates a lack of liquidity in the order book, causing even a small amount of money or a small sell-off to look much larger in appearance, even though the volume may be far less significant. So that's what I mean by overextension. And the ratios are simply saying that as you overextend and there isn't any orders in the book chasing that run, then that ratio value of your 0 to 1% band, 1 to 2.5, and so on, they get smaller and smaller because there simply aren't orders in the book. So the ratio grows in favor of the opposing side. So that's pretty much the concept of the tie between overextension and the ratio that it creates. It simply just means that you leave a path of destruction behind, and then you have these full retraces that the space is now has grown to call a Bart Simpson pattern, right? Bitcoin is no stranger to pumps and dumps, and here's a clear one. It took just a number of hours to complete, and we could find probably 20 more if I scroll back. So onto psychoanalysis of market participants. One of the main things that we were mentioning was that the unknown of the order book analysis is when and where market participants are going to market sell and for what reason. It can be market manipulation. It could be I need to sell my Bitcoin to pay bills. It could be every reason in the book. There's a million reasons to sell or buy Bitcoin. And so what we do as we analyze the market is we say, all right, what would be the incentive of analyzing these market participants right now? Yeah, there's a couple things that have happened recently, and let's just look at from a very basic perspective, very basic visual perspective here. I don't want to go into a story, but I have a good story. I could quickly say this.
Go on, Joe.
There was a story that I read a long time ago that said they put about 10 CEOs of massive companies. They gave them each, say, 100K in theoretical money, and they gave about 10 kindergartners 100K in money. And they said, let's try an experiment. Let's see who makes the most money at the end of a month. And the funny thing was they tied, just about tied. There really wasn't a winner. And so when you're looking at a market, I was wondering, what is a 5-year-old going to look at in order to analyze a market, and what is a CEO with decades of market experience going to look at to analyze a market? And so something as simple as size and shape and colors matter to a kindergartner, right? So those obviously are going to impact your mentality. So we see something like this happen, right? A big red candle, 0.69% on a 5-minute chart. Of course, if I move this to like a 15-minute chart, probably be closer to a 1% move, right? 0.69 plus 0.42. We're looking at some pretty significant moves to the downside. This visual impact alone is going to cause market participants to get scared. And there's an interesting anomaly here. Now, normally people think, from the outside looking in, you would think that as the price decreases of an asset, then you're getting a better buy. But that in the speculative space, it's actually the opposite. As price goes down, the majority of people start to worry and get scared, and they sell, right? It's like the most counterintuitive process. The idea and the logic behind price decreasing on a simple supply demand model is that as price decreases, the demand should increase, right? And that's what ends up shaking a lot of people out of the market. We get these moves that have a pretty imposing presence, some strong red candles, a very, very short consolidation, followed by a second impulse down. And just when you think we're starting to recover, bam, we get another 1% move to the downside. So this is having this is causing a lot of stress on traders. And by this point in time, we've probably already shaken out a handful of traders. And so basically what I'm saying is the psychology of market participants is very interesting. You would think that as price decreases, you have BTFD, buy the dip, right? So, but people, really speculators, they hate doing that. And so we can take a quick look at some numbers over here on BitMEX and see what the impact is of quick market moves. And even just so we can actually, this is a great example. I'm glad some time has passed, because you can see here in this short move down from about an $11,800 top, we already have a 5-minute candle with $6.7 million in liquidations, another 300K, another, let's see what this, so another 5 mil. And now at the bottom, 3 mil, another few hundred Ks, a couple mils here. I mean, we're talking about probably 20 mil in total. So at the bottom is where, a liquidation hunt, we can call it, whatever we want to call it. This is where people got shaken out of the market, whether it was stop losses and clearly also liquidations. People were shaken out of the market. The market psychology was at this point in time very negative, despite the fact that the price came down and demand should increase. The psychology of market participants is very important to understand, and that's why the ratios that I create in the SAS signals represent a very important chunk of psychology, which is saying that there is support. Don't lose your mind because price has gone down. It's okay to catch a falling knife as long as the support is there. So
that's a pretty interesting visualization right now. So you
yeah,
can basically see that the price is falling, and at some points while the price is falling, they're also getting people liquidated. So meaning in their over leveraged positions, when the price is hit, then all their money is gone.
yes.
Basically, these positions have to be sold.
So by the
So
time these liquidations were getting hit, let's just take a quick look here at the actual percentage decrease from the top. Let's say it's a 3.31% decrease. Now we're looking at approximately, I would estimate at around 35x positions have been liquidated by now. And maybe around, 20, 25 plus X positions have been liquidated around here. Now, more importantly, this is one of the most important psychoanalyses that we can offer right now. Look at what happened. We just had 2.15 million shorts liquidated. We bottomed out right here. These are new shorts. These have to be new shorts. These are market participants that have just entered the market, probably somewhere around the bottom. And we've gone from low to high only 1%. So this means that $2.15 million worth of shorters were probably 50 to 100x emotional selling, very emotional selling. They saw the bottom, they saw these big red candles, they got scared, and they were like, I need to market buy a short immediately and highly leverage this thing because Bitcoin's going to the floor. This
could
is
you just point out where to see the amount that is
okay.
liquidated?
So I'm looking at in this tab here, liquidations, positions of any size. These are all indicators offered on Trader. But we're going to stick to liquidations, positions of any size right now. So within this tab, as I hover over one of these columns, you can simply look at the
Gotcha.
numeric value to the left. And I could
There
see
we
the
go.
exact amount of liquidations or contracts that were liquidated in that particular span of time. So these shorts that were
So
liquidated.
just to clarify that as well, while the price is going further down and people actually getting liquidated, we're also seeing at the bottom an increase in open interest.
Mm-hmm.
What does it mean, an increase in open interest? What's happening there?
So the language that this is speaking to me, because keep in mind, everything on a chart is language, and you just have to
Yeah.
learn to speak it, right? And so the language here is that look at this horizontal. The same thing happened. We were pulling down into a divergence area where open interest was increasing. This is telling me that every nerve in my body is saying someone was pushing the price down right into somebody's accumulation zone, and open interest sparked, and then it starts falling
So
off.
what's
You get
one second, one second. So when you're saying accumulation zone, that means when there are, for instance, large traders or more professional traders or larger institutions, they want to accumulate, meaning they want to buy at a certain price,
yeah,
right?
they want to push sellers to market sell into their bid territory so they can execute a
But
limit order to incur either a smaller fee or even a rebate. So they let the market do all the work for them, and all they need to do is maybe throw some spoofs in the mix and scare a lot of these people. And clearly we have some, a decrease in open interest. That's a lot of profit taking. Open interest decreases because people were taking profit and taking positions off the table, and maybe
so
there's a little.
open interest. So does it actually mean when the price is falling, some people open their positions? When there's leverage on it, then of course there's interest because they're borrowing money. That's the interest. So open interest is increasing. It's interesting though to see here that when the price is falling, more and more people go into long positions, even
I
though there were so many liquidations.
Yeah, you know, so just from open interest alone, I can't extrapolate solely that this is only longs opening because clearly we see that there
True,
was
yeah.
a three or so, two point whatever million shorts liquidated just now as well. So I'm going to assume that this was an open interest that was long dominant right now, and I could provide more data at another time, but because of this horizontal range. Horizontal ranges are very, very important to big money. They need to protect their investment, and that includes stacking the order book with bids that prevent the price from going down much further. They are defending their positions. So open interest spiking up pretty violently here as price moves down just as much is it expresses to me based on this horizontal accumulation zone, which we had here as well. It's the language it's saying is that someone you know took some profit and they're going to play this game as long as we're channeling until we're ready to break out of 12k. This is what they do. This is easy money. This is easy money to someone that can control the market.
So we're looking here over a range of what is it, 4 days, right? So we can see there, I guess, when you said the horizontal line, this is sort of the support zone. We see here on the right an increase in open interest. So it looks like that the market participants here are really supporting the bull market right now, not wanting the price to go lower. Is that correct?
That's you. You're 100% correct, and that's what I see as well. I see a lot of bulls defending the mid 11Ks. I don't think the bulls want to let price go back down to 11.1 because then we start putting mid 10K on the table. So bulls have the burden of having to support the price and convince bears that they need to pull liquidity or they need to, you know, they need to just sit out of the market and or even flip long because the bulls are in control right now, and this is a little bit of what this language is starting to express to me right now. There's a little bit of uncertainty. We're spending time in some high 5-digit, you know, relative to 10k, a higher 5-digit territory. So the market is a little bit excited, a little bit apprehensive. No one really knows how high this can go. No one really knows if this is you know going to come right back down below sub 10k. But the truth is we see a horizontal accumulation zone that is being protected. That is very important data to me, not to mention profit taking. And as long as there is a channel, a trend, a channel is a trend where basically you have a horizontal range where you can be making consistent money. Um, that's going to be something that they will play over and over and over again. And by they, I mean
So,
anyone,
so
you know, that's smart
if
enough.
I understand it correctly, I guess that's these channel zones is pretty important for traders that trade on a consistent basis, like in and out every day.
Absolutely. It's good. Like
Yeah.
right now, when I zoom out and I have my signals and we pop our head right back into 2.5 for now, and I zoom all the way out and I look at that same horizontal support that we have it here, we have a good bit here. Um, you know, so basically what I'm saying is it makes me feel very comfortable to see signals here, to see signals here, to see signals here. This means that this is an area that the bulls are serious about defending, and chances are bears aren't going to get much further than they are now, and we're going to recover pretty quickly. I don't know if this is going to be a you know a 12k breakout today, but this is showing
Oh,
me clearly that there is demand in this region, this horizontal region, and that is going to create the support required to build, let's say, the ladder without missing rungs in order to have a breakout of 12k with support, which is going to be the most important part of any bull market.
so I guess the message here for our for our audience today is it's a good time to buy right now.
So all my trades are public in my token bot Telegram channel, and I am currently long. I took all these signals, and I'm very comfortable right now. I'm happily long. So you know, from one trader to the rest of the world here, I'm long, and I'm looking at this as a great buying opportunity. I do like to get in and out of positions. I don't know how long I'm going to stay in this one. I'm going to have to wait, observe, analyze. But I do have a take profit zone around 11,600 where this whole breakdown started. And you know, this could really become a strong move. But you know, this is a Monday, Tuesday. I'm sorry, we had a pretty calm weekend. It doesn't really seem like the market's ready to just to rip in one direction or another. It's a little docile right now. So I'm just going to be playing the scalps. You know, high frequency trades, take the money and run trades. And right now is in my opinion, I am taking this. All these signals are buys to me. I'm
Perfect.
taking them every time.
Perfect. All right, let's move into Q&A now. We extended, in this case, a little bit our agenda. I have a few questions here, and everyone who's listening in right now, we have a 20 seconds delay. So whatever we're saying is gonna arrive in 20 seconds later. And also, if we're answering any of your questions, that is also gonna arrive 20
You know,
seconds later on the screen.
why don't I jump
Also,
in for a second, because I see a question that we discussed. Do you mind if I interrupt real quick here?
sure. If
It,
you already have something inside, go ahead and answer that.
because we spoke about this tonight. It's a great question. Isn't Joe a short-term trader? Asked by Eli Khan, if I pronounce your name correctly. If I butchered it, my apologies. How long does he keep his positions open on average? Now, I am a short-term trader.
Great question.
I take the money and run. I like to. The reason is, so let's look at this. If I made 1,000 trades between $7,000 Bitcoin and $9,000 Bitcoin, and a ton of them were profitable, I moved them to my HODL stack. Then and you know, I have this ability to have my Bitcoin do all the work for me while the market is moving up. I'm risking a very small fraction of my HODL stack in my trades, and all I need to do is a lot of high frequency trading to build up my HODL, and next thing you know, I'm letting the market do all the work for me. You know, if Bitcoin goes up, do I need to be long every time? No, I'm making money. You know, so you do have to consider the risk in taking positions if you're arguably in a bull market. So I just want to point out, yes, I am a small short time frame trader, and I can swing. I don't like to, because I'd rather make 1,000 trades in a price range and accumulate tons of Bitcoin, and then if in the event that the bull market takes off, then the majority of the market's doing the work for me, and I'm just sitting and twirling my thumbs. I have no problem being a board trader, you know, if the market's pushing us higher.
Okay, here I would like to go back to one of the very early questions. I'm not sure if this has been answered yet. I have a follow-on to this question. So, okay, let me read. Hi, Joe. Big fan of your streams. I'll get my questions in early. I recall you said in one video that I may be paraphrasing, whichever side, buyers or sellers, is in command of the 5 to 10% order book depth band is in control of the chart. I know your style is mainly short-term scalping, but do you use this band as part of your decision making? How reliable have you found it in assessing the medium term trend? So that's a question earlier on from Tony, and then we have a follow-up. But yeah,
Okay.
let's give this one out.
So a quick answer is the 5 to 10% band is what I'm working on the most right now. There's two. I'm working on this a lot, and we'll skip the other thing for now. But this is the gold mine. The gold mine clearly represents something beautiful. It represents a move that is being chased by bids, and to such an extreme extent that there's a lot of support running, chasing a move to the upside. And you can see last time our gold mine kicked in, we were at around 9,700 or so on the first signal, and right here, and we started taking off in parabolic fashion. The gold mine really does represent something very strong. Even this dump right here, this very violent move to the downside, fell right into the gold mine range and supported the price. So the gold mine in the 5 to 10% band is a trend bias band that I'm working on mastering to make the signal and the ratio produce the best signal so that we can really, really identify short-term, mid-term, long-term trends.
Great. I hope this question was answered now. If not, then you guys are also very happy to then follow up with Joe after this event, and we provide all contact details afterwards. So here was then a follow-up question from Michael. Just in general, how do you look at book depth if there are very old orders just sitting there, taking dust, never expiring? Filtered by most recent X days. Is it possible to filter the order book after how long order is already sitting in the order book? Is that possible?
Yeah, of course. You can either look visually at the order book, or Trader does offer something called order book top levels, which is customizable. And I could see here that let's say 12,000 flat, we've broken it, and there was a very strong wall. The thicker the band is, the more resistance there was. In other words, the more liquidity there was being added to that particular aggregation, 12,000 flat. And so I can look at this and I can see, yeah, 12,000 was resistance. And repeatedly. This is when it became within proximity of the target. The way I have it, the precision set is to the top, only the top 3 in the 0 to 5% range. So as we approach that range, you could see 12K was kind of. Let me hide this order book depth overlay for a sec. You can see that as 12K came into play, it kind of showed some teeth, pulled some orders. Maybe this guy moved some orders down lower because he didn't think his 12K order would get filled. So you can see, yeah, historically, we can see exactly what the orders have looked like in the book. There was a lot of support here that got broken. This is probably lines up perfectly with the gold mine or something like that, one of these, deeper bands. And you can see all the accumulation here that represented probably that, if I expose this, yeah, this is all the signals where we even got purple in the 1 to 2.5 band. So you can see the order book top levels expressing how much demand there is or resistance, support or resistance there is at certain levels. And you can see it as it changes. It gets thicker, it gets thinner, people get scared, people want to pull their orders, people want to lower their orders because they're scared their orders won't get filled. People want to pull their orders because they're scared the price will jump up. Go ahead, Pierre.
Are you also able to see how long some orders are already sitting in the order book?
That's something that is more of a visual thing that you have to look at. I, being an analyst, I would look at this and I would simply take a snapshot right here and say, all right, 11,700 has 132 Bitcoin sitting there.
Right.
Is there a specific thing that I could use that would get me into a to know everything about every order in the book? Not quite, but my
Okay, well,
general.
that's fine. I think it was just a question out of curiosity from one of our members here. Then another older question I have here that was asked earlier on in our event today, but we already moved ahead with the topic. Was, do you think those dynamic orders are mostly spoofers or high frequency traders trying to set up arbitrages across exchanges? Question from Rico.
That's a good question. I don't think that that's the case because arbitrage takes a bit more time and energy than you would think. Um, the primary example of arbitrage was what was known as the kimchi premium in 2017, where in Korea, the price of Bitcoin topped out at around 25K and held, whereas the price of Bitcoin in the United States hit 20K and fell off pretty quick. So what you were capable of doing was moving Bitcoin, selling Bitcoin in Korea, moving the fiat, and buying Bitcoin back. In the U.S. exchange for $5,000-$6,000 cheaper, and then selling somewhere else. Now that's a slow process. Maybe with the introduction of something like U.S. dollars, Heather, the game has changed a little bit. Maybe certain, like, not the introduction of USDT, but maybe the use of it more so now than than it has in the past, and obviously the market cap of Tether has
That's
grown.
actually a very interesting topic I've been following as well. The volume of USD Tether, so the market cap has been
Yes.
increasing and increasing over the last months, faster and faster and faster. So it's very interesting to see how a centralized stablecoin, like a private company, is holding the hand over the stablecoin, unlike Bitcoin, for instance, is increasing in market capitalization. That's very interesting. I don't know. Were you done answering the question? Otherwise, I would move on to the next one.
No, I think we can be done, and we can move on.
Okay, great. Then the next question. 1 second. I just had it here. Yeah, I think it was about from Eli Khan or Eli Chan. How much percentage of his total margin does Joe invest in every entrance?
Oh, cool. So I like to scale in. Sometimes it's 0.5x, sometimes it's 0.75x, sometimes it's 1x. I really don't like to stack into a position. In other words, I like to give myself breathing room. I like to keep my liquidation price as far away from my entry as possible. And in this case, I'm getting more and more signals as price moves down, right? So naturally, what I have to do is, based on my strategy, I don't mind putting in 0.5x 10 times, ending up in a 5x position. I'm going, that makes me feel a lot more comfortable, because in a 5x position, after I've, entered 10 times at 0.5x, say price was to take another plunge, I can add another 5x, and that would decrease my average entry by another 50%, right? So then that would, chances are, if we were to plunge again, then that would give me the breathing room to add more leverage, drop my average entry, and then walk out of that trade on the bounce. I can walk out at break even much more easily, instead of having to wait for this, maybe multi-$100 margin to get covered, and then hope and cross my fingers that I'm going to get out alive.
Okay, let's keep the time in mind here. I have a few more questions here from the audience. One you could answer very quickly. The other ones I can answer. Mike McDonald is asking, does Joe focus on particular currency or particular currencies or pairs?
I focus lately on Binance US dollar tether, but there are tons and tons and tons of anomalies with other fiat pairs, the GBP, Canadian dollar, all kinds of pairs. I would recommend, if you're using whatever exchange you're using, just make sure there's liquidity. Whatever currency pair you're using, make sure there's liquidity. And if there isn't, then put in a bid at $1,000 Bitcoin or $3,000 Bitcoin, because there are so many anomalies in illiquid markets where Bitcoin swings so ridiculously fast from a fat finger sell or something like that. And so if you are trading on without an illiquid market with an illiquid pair, be very careful. Put your bids very low, and cross your fingers, go to sleep. You might wake up one day with 10 Bitcoin at $1,000. It's crazy, the stuff I've seen on some of these illiquid pairs.
All right, let's move on to the next questions that I'm gonna answer very quick. Rico is answering, do you backtest your indicators? And Vaji is also answering about backtesting. I know personally, since I've been talking to TRDI, that they are working on building most superior backtesting engine that is to be found in the crypto market right now. And backtesting has always been a very difficult topic in the crypto space, and is not nearly as level of sophistication as we see in the traditional financial markets. Also, if I've heard personally, and I don't want to talk anything bad, it's just an opinion in the market. I heard personally from many sophisticated traders, as for instance, TradingView is very difficult to backtest with, since there is some inconsistency in data.
Yep.
But yeah, I think we will be seeing more there from TRDR. And I've also heard that TRDR is going to open up an API and providing traders that are building algorithms, and traders would like to access the data to do that over their API. Okay, I would like to ask everyone now to ask further questions to Joe directly. He will be hanging out a little bit longer in the chat here, and is happy to answer all the questions. Joe, could you quickly open up your Twitter profile so people know how they can find you, and also everyone else who like to follow Joe, you can do so over his Twitter profile here.
Yep. So you can.
Also, in the show notes, you can find his Twitter handle and his Telegram handle, and as you can see here, also his YouTube channel. A little disclaimer here: the opinion that we expressed today are our own personal opinions, and it's not financial advice. Always do your own research and homework, and don't trust purely on other people's opinion. On the other side, also, you will be finding a recording of today's event later on YouTube, and we will share it with everyone else. And I think that will be it for today. Joe, do you have anything to add at the end?
I'd just like to say thank you for inviting me on. I had a great time over here, and thank you for all the audience questions. And I'm happy to serve the traders entering the space to the best of my ability. Thank you, Pierre.
And Joe, thank you very much for taking the time today as well, for helping our novice, intermediate, and also more advanced traders. I hope everyone could follow. I've seen some comments in the chat earlier that the language was a bit too sophisticated, but I know from my side, it's very difficult to cover or to make everyone happy in the trading space, since you always have people with different experience levels. I want to, at the very end, last but not least, point out again, today's episode was sponsored by TRDR, the platform that Joe has been using and showing how he's trading and how he's optimizing his strategies. If you like to test out the platform as well, please find in the show notes a link that will give you an extended trial period. So something you wouldn't get usually. TRDR supported us in that way. And also, Joe is very happy to help any novice, intermediate, or advanced traders if you approach him directly, and I'm sure also on his YouTube channel. So keep engaging with Joe and with our community, and we'll be looking forward to the next event and to engage with the community. Joe, thanks for attending. Was a great pleasure, and looking forward to the next event.
Same. Thank you so
Cheers.
much.